right, since it's officially 6 p.m. on the dot, we have a lot of content to go through, so I'm going to get us started. My name is Kiara Forster, and I'm the Forest Program Director for the Watershed Center. And then I also have Maria with me today, who's our Community Program Manager from the Watershed Center. We unintentionally matched. We don't have green sweater uniforms. Um, and it's really great to see a lot of names that I recognize from forest management projects in the area. I see folks from Meeker Park, Conifer Hill, Jamestown, Raymond Riverside. So thanks all for joining. Excited to see you all on the screen instead of in the forest, I guess, but hopefully in the forest next time. Um, so for those of you who haven't interacted with the Watershed Center before, we're a small nonprofit. We're a local nonprofit that's been around since 2005. And so we protect and restore watersheds for people and the environment using a collaborative and science-based approach. And so part of that includes restoring forests and managing forests so that we can have those reduced wildfire risks while still maintaining ecological benefits of forest management. And so through our forest management work, with many of you, we've heard a lot of questions about insurance. And so we were really excited to actually met Lisa, who will be presenting today at a conference, and she was like, I do insurance in the fire world. And I was like, oh my gosh, do I have 100 people that want to talk to you? So we're really excited to bring United Policyholders expertise to you tonight, as well as Jim Webster from Boulder County Wildfire Partners is here as well. So at the Watershed Center, we coordinate the St. Vrain Forest Health Partnership, which this event is hosted through. And so it includes Boulder County, State Forest Service, U.S. Forest Service, basically anyone who owns or manages land in the St. Vrain watershed. We're all working together for more resilient forests and communities that can receive wildfire and without detrimental impacts to communities, water supplies, and the forests themselves. And so I'll talk about ways to kind of stay engaged and informed about events like this in the future. But I'm really going to keep this short again, because I don't know anything about insurance, and that's what you're all here to learn about. So the way that this event will go tonight is first we'll hear from Lisa with United Policyholders. Emily is also here supporting, and so they'll present. And then we had a lot of awesome questions through the pre-webinar form that really asked a lot of questions about how mitigation interacts with, your ability to hold or maintain or obtain insurance. And so we brought the expert of the experts here for mitigation, Jim Webster from Boulder County Wildfire Partners. After these presentations, we'll have a couple substantial amount of time for Q&A. Questions that were submitted before the webinar will be prioritized, but then we'll also have a survey link that we'll put in the chat at that time where you can add additional questions, and hopefully we'll be able to get to lots of them. So you'll notice that because of the number of folks that we're excited to host tonight, we did disable the group-wide chat function just to kind of try to limit chaos. So feel free to use that chat if you have technology questions. If something isn't quite working on your end, feel free to send a chat to Maria or I or any of the other co-hosts, and we'll see it. So first up, we have United Policyholders. They are a nonprofit whose mission is to be a trustworthy and useful information resource and a respected voice for consumers of all types of insurance across the United States. And today we're joined by Lisa Hughes, who's a Colorado liaison with United Policyholders, and Emily Rogan, who's a senior program officer for United Policyholders. So thanks to them both for their time tonight, and I'll let them take on.
Thanks. Okay, well, hi, I'm Lisa. I'm going to pull up my slide deck in a second, but just wanted to thank Kiara and Maria for having us. And yeah, I'm local to Boulder County, so this is like doing it in my backyard, except on Zoom. And I hope everybody's staying warm in the frigid temperatures we're having here right now. Let me share my screen. Okay. And I apologize if you hear my dog barking in the background. She's downstairs. Okay.
Looks great.
So can everyone see this?
Yep, looks
Okay.
great.
All right. So insuring your home in fire country. So just Kiara already mentioned this, but a little bit more about us. We are a 501c3 nonprofit. We work in all 50 states. We have been around for 34 years, and we have subject matter expertise in insurance and preparedness and recovery. And we've been working in Colorado since 2010. We're not for profit. We're not for sale. People, even though we sound like an insurance company or in our name, we're not. We're funded by grants and donations. And we have a big volunteer corps with personal and professional expertise. And like Kiara also kind of said, we are monitoring the property insurance marketplace in Colorado and in the rest of the country to see to keep you apprised of what's going on. Okay, we have 3 programs. I'm just going to touch on these very briefly. Roadmap to Recovery is our program that helps individuals and businesses navigate insurance after disaster. Oh, I'll get to that in a second. So these are some of the Colorado disasters we've supported. And Roadmap to Preparedness, that's basically what we're doing tonight, helping you increase your insurance and disaster preparedness by sharing lessons learned from other disaster survivors and other partners. And Advocacy and Action, which is where we stand up for consumers in courts of law. We work on legislation with legislators, public policy, and other things, media in that arena. Okay, a little bit about me. I live in Louisville. I lost my house in the Marshall Fire. So this is obviously a topic that I'm very familiar with. And I've been working for UP since about August of 2022. And I pretty much work in all 3 of the programs that we just discussed. Okay, so what is going on right now in the world of homeowners insurance? So this is an update. So essentially, a combination of factors has created a national property insurance crisis, especially in areas where there have been a lot of disasters or large-scale disasters. So things like profit objectives, the number and cost of claims, risk segmentation, too much information facilitated by technology, scoring systems, we'll talk a little about that later, drones, etc., have resulted in big rate increases and reduced underwriting. And as I'm sure you all know, climate change and severe weather events have greatly factored into that as well as inflation and a hard reinsurance market. So for people who don't know, reinsurance is basically the insurance that your insurance company buys to help them be able to mitigate their risk and spread it out. And that has been increasing in price for the last few years. So that often is getting passed down to the consumer in the form of your premium. So what does this mean in Colorado? Well, essentially, homeowners insurance has become much harder to keep, find, and also afford. And sometimes name brand insurers have not been selling, they've stopped selling new policies, made premium increases, limited the number of policies they're going to sell. And we've definitely seen that. And then we have households who are finding that their only option is to get a policy on the surplus lines market, also called the secondary market, also called non-admitted market, which basically is the insurance companies that you've never heard of. And they're a lot less regulated than like the insurers that you see on TV, for example, that are highly regulated in every state. And their forms and rates are not regulated, and they often don't participate in insolvency funds. And Colorado's FAIR Plan, I know there were a lot of questions about this. We're going to be talking about that a little bit more in depth in a future slide, but it is in development and I believe currently available. And we'll talk about how you access that later, but that's another thing happening. And we are just helping people try to find any viable insurance option that they can. And this last one is important, and we're going to talk about this more tonight too, is trying to reduce your risk profile is really important in keeping your insurance affordable and being able to keep it at all. Okay. So why does insurance matter? I mean, as you know, if you have a mortgage, it matters, and it matters in other reasons too, mostly because after a disaster, your insurance money is what is going to help you rebuild or recover from that disaster. It's not going to be charitable or government aid. Government aid is often limited. FEMA is needs-based. The maximum grant for, and this changes each year, is $42,000. And SBA loans you have to repay, and often government money. Sometimes you have to repay government money too. And as it says, charitable aid generally only covers clothing, housing, food, not the cost of rebuilding. And one thing to mention about this, and we'll talk about this a little bit too later, is that in the Marshall Fire, we found out in one of our surveys that the average person in the Marshall Fire who was underinsured by $110 a square foot. So this is why insurance is really important. Okay, so what is the new normal? Well, the new normal really is that you have to pay more attention to your homeowner's insurance policy and to how much it costs. And when you're than you've ever had to before, for some of the reasons we've already talked about and that we're going to talk about. And also, these are some things you want to think about when you are looking at your current policy, when you're shopping, etc. So, how much am I currently insured for per square foot? How much, or do I even have extended replacement cost coverage? And that is additional coverage you can buy above in a percentage above your dwelling limit. And in Colorado, a new law just came into effect last month due to mostly Marshall Fire people being impacted and severely underinsured, where your insurance agent or broker now has to offer you up to 50% extended replacement coverage. That's up from 20 prior to this law going into effect. And we're going to talk in a minute a little bit more about why extended replacement coverage is really important. And then also, do you have building code upgrade coverage? You also might hear this called ordinance and law coverage. Basically, that's the difference between the codes that were in effect when your house was built and the codes that are in effect when you're rebuilding your house or repairing it after disaster, which if you have a fairly old house could be quite significant and a significant amount of money. So you definitely want to make sure you have that coverage and find out how much you have. And again, another Colorado law just went into effect, and agents and brokers now have to offer you 20% of, sometimes they'll offer you more. You can pay for more if they offer it. But they have to offer you up to 20%, up from 10, which is what it was prior. So that's also a really great change that just happened. So when you're shopping for insurance this year, make sure to mention those to your agents if they don't already know about it, but they should. Do you have a policy for contents that's replacement or actual cash value? We'll talk about actual cash value in a minute, but basically actual cash value is how much you pay, is the cost of the item minus depreciation. Do you have any limits on mold, water damage, etc.? How long is your alternative living expenses, also called loss of use? In other words, if you have to move for a certain period of time, how much coverage do you have with that for your insurance? And again, Colorado law requires you to be offered up to 24 months. And it says ask for 36. In some certain cases, like I know my personal insurance, if you're in a wildfire, you can ask for 2 6-month extensions. But again, it's your policy and you need to work with your specific insurance companies and agent on that. And then know your deductible. Do you have a dollar amount? Do you have a percentage of your policy? Or maybe you have both. Okay, trying to watch the time here. Okay, so what matters? These are what we basically just talked about, but if you can get a replacement cost coverage policy over ACV, that's really important. Extended replacement coverage, which is basically, again, that additional first bucket, Schedule A, that's going to help you. If you max out your limit, you'll have that coverage to go into effect. Building code or upgrades. If you have things like jewelry, you run a business out of your house, you have really expensive art or antiques, you want to make sure that you have extra coverage for those. And this is also really important. You want to know what's not in your policy or what is not being covered. Flood, mold. Do you have a cutout for hail now? A lot of insurers are doing that here in Colorado since hail is our #1 claim. And then also your deductible, which we just talked about. Okay. Kiara and Maria mentioned that there were some questions about flood insurance. So flood insurance is not part of your homeowner's policy. It is separate. You can, and the reason you might want to consider having flood insurance is because oftentimes after disaster, there can be like erosion or flooding from runoff and etc. So that's one reason to think about getting flood insurance. And as you know, if you've lived in Boulder County for a while, we had a flood here in 2013 that was pretty significant. So they do happen. So if you get flood insurance through the National Flood Insurance Program, that's what NFIP stands for, there's a 30-day waiting period. And here's a website to get a quote. The coverage is limited to $250,000 for your dwelling. Contents is additional separate policy. And it only covers losses caused by flooding. So not your other homeowners, things that your homeowner's insurance covers. And it does not include additional living expense coverage. That's pretty important. And there are private flood insurance options available. I actually have flood insurance through a private company. It was cheaper. The waiting period was shorter. So it's definitely something to check out. Some of the private companies out there too. But either way, that is how you can get flood insurance if you're interested in flood insurance. Okay, so here are some strategies to help keep your homeowner's insurance affordable. And I'll probably say a lot of these a couple times because they're really important, but we want you to shop around. Find a proactive insurance agent or broker who can help you, preferably someone local that really knows the market in our area or whatever area you're in. Find out what discounts are available and what you qualify for. Maybe bundle your home and auto with the same insurance company. Often that can get you a discount. Consider raising your deductible. Get quotes for different levels depending on what you're comfortable with and what you think you can afford. And a higher deductible will likely reduce your premium and you'll be less likely to file a small claim. And we'll talk about that in a second. And then try to get rid of buckets of coverage that you could live without. If you think you don't need a really high limit on contents, you can bring that down. If you have other structures coverage, but maybe you don't have any other structures, you may not need that. And then we're going to talk about this more later, but mitigate, try to harden your home, create defensible space, and have that in proof to give to your insurer. And this last one is pretty important. Try not to file any small claims if you can, especially if they're under the limit of your current deductible. But even if they're on the smaller end, if you can afford it, we are encouraging that because it impacts your risk score, which we're going to talk about, and your risk profile. And the less claims you have, the more likely your insurance company is going to hopefully keep insuring you and do what you can to improve your risk profile. So you can install a lot of moisture sensors or all kinds of other things. Okay. This is a picture of our new Colorado RAT card that we just came out with, and we're going to be talking about basically all of the things on this, but this website will take you to our specific information if you get dropped or non-renewed by your insurer. And I think this will be in the links I sent Maria as well. So I'm not going to go over this, but this is what it looks like. And here's that website again. So if you get dropped or non-renewed, here's some things you need to do. First, you should learn the lingo. So most home insurance is a 1-year contract. So every year it renews. So if you get dropped or non-renewed, your insurance company is not, they don't want to cover you anymore when your current contract expires. And we're in Colorado now, there's a new law that insurers have to provide you 60 days notice if you get non-renewed. Canceling means that you didn't pay your bills, or maybe you lied to them about the condition of your home and they are just canceling you. Difference in condition policy, we'll talk about that more when we get to the FAIR plan, but basically it's specific to the FAIR plan and it's a product that fills in the gaps of coverage that the FAIR plan does not cover. And admitted and non-admitted, we just talked about those at the beginning. Admitted is your big name insurers you hear on TV that everybody's heard of. And non-admitted is less regulated and maybe more of smaller or other companies that you haven't heard of. So you could be looking for a policy on the non-admitted market if you can't find one and admit it. So some reasons they might not offer you to renew you or give you a new policy: your claim history, which we just talked about, your home's risk score, so what they think your risk is. And these are several other reasons why you might get renewed. The last two, or the second to the last bullet, a monthly quota imposed by the agency you buy through. I have heard of this happening locally. It really just depends on the insurer, but they might say, you know, X company can only write 5 policies in this area for this month. So something to keep in mind. And then business objectives. They are a business, they're trying to make a profit, so they have to think about that too. And the number of homes they're currently insuring in an area, especially if it's a higher risk area. So what should you do if you get dropped or non-renewed? You should start shopping right away. You might need that whole 60 days that I talked to you about. And when you get non-renewed, hopefully they're giving you a reason why too. You want to look for a proactive agent. We talked about that. And when you're having the conversation with those agents, you want to understand the basics of what's most important to cover. Those are some of the things we already went over. And ask a lot of questions. Keep good notes. What you're, excluded, what's not excluded. Get quotes from different places, and try to invest your best, to insure your home for replacement cost value. So code upgrades, all of the other things we talked about, extended replacement coverage, and be prepared to make some risk reduction improvements too. Like your roof is a big one here in Colorado because of hail. They may make you replace or fix it if they're worried about it. These are some general rules. We've already talked about the 60-day one. Insurers have to, in Colorado, insurers have to apply their rules consistently. So if they do it for one customer, they have to do it for you too. And if you're in a fire area that was designated as a federal disaster, they have to renew you for a year. They can't non-renew you during that 1-year period after the disaster. But that doesn't mean they can't ask you to fix it if your house doesn't burn down. Okay. The FAIR plan. I know there's been a lot of questions about this. The FAIR plan just rolled out this year in 2025. So it's been around and I think available for about a month. It is intended to be the market of last resort. So this is where you go if you cannot get insurance in any of the other places we've talked about, the admitted market or the non-admitted market. And you need 3 declinations to be eligible, so declines from 3 different companies. You have to purchase the policy through a licensed agent or broker. You cannot just go on the website and sign up yourself. It's generally for high-risk properties that have no other options, and the coverage is very limited. So if you can get a policy in the surplus lines market, it may be a better route to go. And this is what the coverage for the FAIR plan includes. So it is an actual cash value policy. So it's replacement cost less depreciation as opposed to a replacement policy. The coverage limit is $750,000. So I just want people to think about that for a second. I know we have people from all over, but here in Boulder County, that could be fairly low for a house. So just something to keep in mind. And your house can be worth however much money, but they're only going to cover you for $750,000. And it's a fire and lightning policy, and you can purchase extended coverage for other things. I think it also does include wind and hail, but you can buy all of these other things. The rates are not yet available, and we don't have a whole lot of other information currently about the FAIR plan other than this, but we're hoping to get more, and we may be hosting a webinar later in the year on the FAIR plan specifically. Okay, so mitigation matters. Jim's going to talk more about this in a few minutes, and but ask your insurance company if they offer mitigation discounts for things like FireWise. If you just became a FireWise community, you may be able to get a discount. Impact resistant roof, they do offer that in Colorado. If you have a class 4 impact resistant roof, most insurance companies will give you a discount. And it's really important for hail as well, as you all know, like I said before, the #1 claims in Colorado is for hail, followed by wildfire. Have a home assessment done through either Wildfire Partners, your fire department, other places that might be offering them. Make a plan, what you can maybe do yourself versus if you have the time or money to do a bigger project. And definitely look for grants that are available to help. I know Jim may speak to this. Last year, Wildfire Partners had some available in Boulder County, and they may this year too. And connect with your local fire department neighbors and community. So this is really important. Either become firewise, just, team up for mitigation if you need to. We have heard that insurers are starting to look more and more at community level mitigation when considering whether to insure people or not. So, and I've heard that from people in Colorado in the insurance industry. So definitely something you want to be thinking about with your neighbors. Okay, this is our Colorado Home Insurance Help page. So again, Maria has this and she'll be sending it out to you, but you can go to this if you need help after tonight for any of the things that we've talked about. All of our publications related to Colorado and home insurance shopping are on here, as well as our shopping help webinars. We did one this past October of 2024 that dives more deeply into the things we've discussed tonight. So you can feel free to watch that at your own leisure if you need further guidance that we weren't able to cover tonight, or that you can't get your question asked in the Q&A. And our executive director, Amy, does this, and it's highly informative. So I recommend watching that when you have an hour. But these are all here. They're here for you to access 24/7 whenever you want them. We work closely with the Division of Insurance. They are another resource. They're the state Department of Insurance to help you if you need help. So these are some of the things that they offer: a buyer's guide and a toolkit for homeowners. You can also file complaints if you need to on their website. So this is their information. And they have a lot of good information on their website as well. They have a comparison tool for homeowners policies, I believe, and auto insurance policies. So you can use that to help you when you're shopping as well. We kind of touched on this already. You can do a home assessment. These are some places that are offering them, but check with your local department or entity. Okay, and then create defensible space. That's a big one. Harden your home. Firewise, FACO is another good resource. This is our another card we have about improving your home's chance of surviving a wildfire. Try to have, wings of your fence that don't touch your house, that are non-combustible, etc. And I'm going to let Jim talk more about that in his time. Okay, so I want to leave you with this. You don't need to be scared. You need to be prepared. And like we've talked about, you want to get educated on your options, which hopefully tonight was your first step in doing that. Again, you want to find a broker or an agent who can help you and really understands the market in your particular situation. Try to get rid of coverages that you don't need, but really try to avoid underinsuring your dwelling. That is the most important part. And aim to insure your home for what it would cost to rebuild it from the ground up in the current market, like if a disaster hit tomorrow. There was actually another law that passed in Colorado in recent years. I think it was last year, might have been 23, where the Department of Insurance is going to eventually, I think hopefully that's going to happen later this year, will have on their website a list. I believe it's going to be by county, where you can see the rebuild or the approximate rebuild cost for the area where you live. So that'll be a tool you can use and then take to your agent and say, oh, I live in X county and this is how much they are saying it's going to cost to rebuild my house from the ground up, and use that when you're helping yourself insurance shop. So look for that later on in the year in the Department of Insurance website. Compare premiums. And if I leave you with one message as a disaster survivor myself, and with everything else we've talked about, please, please, please create a home inventory. If you have not done that, it's extremely important. Go around your house with your phone, walk around, open every drawer, say, I bought my couch at Macy's in 2022. It cost X money, because it will save you great headache later down the road in the unfortunate event that you experience a disaster, because you can use that to remind yourself what you had when you're dealing with that, and you can send it to your insurance adjuster and say, here's what I had and here's how much it costs, and it will help you and save you a lot of time. And also make sure to store it safely. Do not store it in your house. Store it in the cloud, in a safe deposit box, somewhere where you can easily access it, and it'll be right. And please also just remember to update it every so often. If you replace things, buy new things, you want to do that. So that's my personal, I like to stress that one because I have gone through that experience, and we would like you to not have to go through it in the same way. Mitigate, we already talked about that. And then choose the best option available. So admitted market, non-admitted market. If you have to do the FAIR plan, hopefully it's only a short-term option, and then you're able to get back into the regular insurance market. Okay, I think it's almost Jim's turn. Yes. So we want to thank you for inviting us. I think I wrapped up a little early. Again, this is our home insurance shopping help page. This is my email. If you're local, you can reach out to me and I can try to walk you through things or point you to things on our website. But yeah, we want to thank you for letting us present, and I am going to turn it over to Jim.
I'm gonna take over for a second.
Oh, sure.
I'm a control freak. Thank you so much, Lisa, for that incredible amount of information. I am
Yeah, I
learning
know
a
it was a lot.
ton. I'm not a homeowner yet, but that was, I like feel primed. So thank you. And I know that I'm sure that answered a lot of questions a lot of folks have. And again, I just want to I got a couple messages of, oh man, I'm taking so many notes. Is this going to be all recorded and shared? And just to reiterate, this will be recorded, posted to the Watershed Center's website. And then we're also going to send an email out with the recording, with the slides, and then with some awesome resource links that Lisa and Emily sent over. We'll send all of that over email to all of you and to everyone who registered for the event. And you can feel free to share that with all your friends, because I know that's the most exciting thing to talk about with friends is insurance. So thank you so much, Lisa, again. And we're gonna loop back to Lisa and Emily at the end for the Q&A session. But on the note of mitigation, we did get a lot of awesome questions before this webinar about the kind of intersection between, does doing mitigation actually help with insurance? And so just to also kind of pipe in from the lens of the St. Vrain Forest Health Partnership, I wanted to note that so there are some folks that I think might be just outside of Boulder County, kind of on that Larimer end. And so just wanted to note that Pinewood Springs Fire Protection District does home assessments. There is a Larimer County Wildfire Partner Program as well. And then the Watershed Center, we do mostly forest management, so work outside of that kind of 30-foot buffer, because Boulder County Wildfire Partners does that so well already. We're just going to complement that effort by working farther outside of that, and we conduct community-wide wildfire mitigation projects, which a lot of you are part of. And so feel free to reach out if you have questions about forest management, and I'm happy to connect anyone with their local fire protection district, who are all members of the St. Vrain Forest Health Partnership, or directly with any other entity that does anything to do with fire or forestry. And so with that, Jim is the program manager for Boulder County Wildfire Partners, which is a nationally renowned mitigation program. It's a really great resource that we're really lucky to have in Boulder County, and that I'm excited to see kind of being mirrored in Larimer as well. And I wanted to note as well that because there are a lot of questions about the efficacy of being able to conduct mitigation to affect insurance, we're gonna bring Jim back for his very own longer webinar to be scheduled. But he was gracious enough to come on with just a few days' notice because we had so many great questions. So thanks to Jim, and I'll pass it to you for a few minutes here.
Great. I really want to thank Kiara and Maria for the invitation and all the work the Watershed Center does. Great partnership and great leadership for our community. And Lisa, that was a great presentation. A lot of really good information. And so I don't have a presentation. I just have 5 minutes on the agenda to introduce Wildfire Partners. And we really want to get to the question and answers. But Wildfire Partners is Boulder County's wildfire mitigation program. And so we were launched in 2014. And as the name implies, Wildfire Partners involves a number of folks in addition to Boulder County. The idea is we work with the homeowners and the fire districts and the realtors and the private sector and insurance. And so we have a lot of programs. I'm not going to have a chance to mention all of them tonight. Do want to mention a couple. Lisa alluded to, we have a rebate program for everyone in the county. We have a community chipping program. We have a community mitigation program. Lisa mentioned Firewise, and Lisa, I want to congratulate you on your leadership within your own community to really work on that community mitigation effort and achieve that Firewise designation. So we have a lot of programs. I won't have a chance to talk about them all tonight, but really want to focus, at least introduce our home assessment and certification program in Western Boulder County, because that has the most direct impact on insurance. And there's so many things we could talk about. We could talk more about FACO. I'm actually the chair of the board of FACO. And so there's a lot of great mitigation work going on and at different levels. We talked about landscape with the Watershed Center and community mitigation, individual homeowner mitigation, but I want to talk a little about with insurance companies. So in 2014, even before we launched the program, we partnered with insurance companies to look at the science with them, to look at their policies, their needs. And so the idea of Wildfire Partners and the folks who apply to the program and are accepted, we work with them to reduce their risk. This is not just about quantifying risk and scoring. The really key for us and why the county's involved is that we want to reduce the risk. We want homes to survive. And so in addition to just scoring, we used to score properties in the 90s, and there's a lot of programs for scoring and quantification and risk assessment. What we want to do in Wildfire Partners is really reduce that ignition potential of homes so they survive a wildfire. So based on the science, we know how homes ignite with embers and direct flame contact. So we have tools, mitigation measures, as Lisa alluded to, hardening homes and creating defensible space to reduce that ignition potential. So that's really the county's interest and the homeowner's interest too, and as well as the insurance companies. Everyone wants those homes to survive. We don't want to keep rebuilding our communities. That's the last thing we want to do. So we want to use this science and harden our homes and create defensible space, and that'll increase the chance a home will survive. When we talk about mitigation, it's not a guarantee. It's a way that you can reduce risk. And so the idea of partners is to work. We offer that individual home assessment with the homeowner. So we're working one-on-one with that homeowner. We'll come and look at every vulnerability and every pathway, produce a report from you, give you the education so you understand how homes ignite, what the vulnerabilities are, and give you a customized action plan where we look at 50 mitigation measures. And we also talk about inventories, Lisa. So we're reinforcing that key message of doing that home inventory. But we work with those homeowners after that assessment with financial assistance and technical assistance. And then the homeowner works on that action plan, and then they'll complete whatever mitigation measures that they have that are required for that certification to complete. So it's different for every homeowner. Some will have a long list and some will have a shorter list, but people will work at that at their own pace and time. And when they're ready and they've completed their mitigation measures, we'll come back and inspect. And if inspections passed, we'll certify and provide a yard sign. And the idea with the certification is that individual homeowners can provide that to their insurance companies for them, help them obtain insurance. And so over the years, we've got 4,000 participants. We've helped hundreds of homeowners obtain and retain their insurance through that certification process. So the idea is we've worked with insurance companies so they recognize that certificate. A lot of the problems across the country is there's mixed messages. Different insurance companies have different mitigation standards, or they conflict with other people's standard, and so there's uncertainty. So the idea with the certification program is you work to obtain that certificate. You want to do that early, right? You want to do that and get that certificate and get that recognized, and then that'll help you with insurance. So we've partnered with insurance companies to get them to recognize that that certificate. And as Lisa mentioned, there's not a plethora of insurers anymore that are offering new policies in this difficult market in Boulder County. But currently, for example, Allstate is continuing to work and recognize their certificate. And so that's the idea in terms of get that mitigation recognized so you get benefit for doing that. And so get that certificate accepted because it is really based on the best available science with local expertise and not some conditions that come in from another state that might not make sense for your particular home. So the idea of partners in the certification program is that gets recognized. And, talking a little bit with the state level and how we, improve and address the crisis that Lisa identified, and she mentioned some legislation, but working with insurance companies so they actually recognize mitigation in their scoring and in their rate setting, because it really does reduce that risk. And so that's a little bit of a quick introduction. We can talk mitigation measures. There are a lot. We look at every vulnerability. We can talk about 50 different questions. Our rebate program is something everybody can do all over the county, not just the West. And so 6 of our calls to action this year that were coming up where you can get $500 for doing that rebate, including junk your junipers. We don't like junipers because they're green gas cans next to your house that quickly ignite. We're talking about fences or fuses. So replacing that first 5 to 8 feet of fencing that's touching your home, that really is a fuse if you have a combustible cedar fence next to the home. We have screen your vents. You really don't want embers entering into vents and igniting your home. We're talking about the first 5 feet of defensible space. That's really critical, not to have that mulch up against homes. We also really look at the base of walls. So that first 6 inches right at the base is a really important vulnerability. So if you have mulch up against your wood siding, that's a place that your home's going to ignite. So we want that first 6 inches to be flashing, metal flashing, or non-combustible siding, or your exposed foundation. So there's a rebate coming up this year for. And the other thing we want you to do is you get rid of that debris, that accumulated life debris, or what we politely sometimes refer to as junk, but it's the stuff underneath your deck. So people, it's not just vegetation, right? We think of mitigation as forests and trimming trees and creating that crown spacing, but a lot of material that ignites around homes is not just vegetation, it's the things we've accumulated over the years and just stash under the deck or up against that shed that we think we're going to use later. Those are the things that can ignite your home. So again, more information to come, but the idea is Boulder County, as well as a lot of other counties and jurisdictions, are working with homeowners to reduce that risk, to reduce that ignition potential through hardening that home and creating defensible space. So a quick introduction, but really looking forward to everybody's questions. And Lisa did such a fantastic job. She's a leader in our community. And really, we need more spark plugs. We call them spark plugs, community leaders. Of course, she works nationally on these issues too, but getting involved in your community. We want you to mitigate your own home, but then work with your neighbor and work with your community because it is a shared risk. So
Thanks so much, Jim. That's super helpful. And again, this Wildfire Partners is an incredible program that we're lucky to partner with. And it's a free home assessment, right? That's the first step, and that provides
home assessments and money too. So thanks, Kiara, for reminding me.
That provides a lot of really useful information, and again, we'll send out information for how to schedule that first home assessment with Wildfire Partners, or with, if you're not in Boulder County, we can share other ways to conduct a home assessment with Fire Protection District or Larimer County. And we'll also send out the Home Ignition Zone Guide. So what Jim was talking about with, and that's also already linked on our website. If you get antsy before you get the email and you're like, man, I really want to see some checklists, feel free to go to the Watershed Center's website, and it's linked under landowner resources. But that talks about both that home hardening, so what Jim was talking about with the vents and the building materials, the home hardening, as well as that defensible space and kind of moving outward into the vegetation, those multiple zones. And again, we will be excited to have a webinar where we can have Jim talk for longer, because it's always really helpful to hear his perspective. And so we're gonna jump into the Q&A. And as a reminder, just to try to make it easier on Maria, who's gonna be sifting through all of your questions, she's gonna pop a link into the chat. And it is very nicely named Submit Questions Here. And you can just go in there and submit those questions. And if we get through the kind of ones we're prioritizing from that were submitted before the webinar, we'll be able to answer those. But I'm sure that Lisa and Emily and Jim will all be available as well after this to ask questions and continue to be a resource beyond this webinar. So the first question we have, and Jim, you touched on it a little bit with kind of weather mitigation actually does help with insurance on the individual scale, but could you just kind of, Lisa or Emily or Jim, touch specifically on at what scale do insurance companies assess risk? So Lisa, kind of thinking about, are they looking at kind of the whole community? Are they looking at that individual scale? Are they looking at both? And are there any insurers that analyze individual property risk rather than kind of painting with a broad brush?
Okay, I know some of that, but I think I'm going to let Emily take this
Great.
one.
Awesome.
She
Thanks.
has a little more knowledge than me on that
Yeah,
one. So,
thanks. So, that's a really good question. And, we often hear people a little hesitant sometimes to do home assessments through their community or really, wanting people to come and take a good look at their house, right? But your local community, whether it's, it's Jim's group or whether you do it through your local fire department, they are doing it as a service to you. They're not sending that information back up to the insurance companies, right? However, the insurance companies most likely already have much of that information. Part of what we're seeing that is contributing to both rates going up and availability in different areas, and this is a national thing, it's not just a Colorado thing, is that insurance companies have access to so much more data now, right? So we've heard people who have had they're being dropped because their insurance company is seeing aerial images of their home, which is, Google Maps. It's either a satellite image or in some cases a drone. And they can see the outside of your house. They can get a lot of information already from just technology that's out there. There are risk there are companies that sell this kind of technology to insurance companies of your consumer data. It's kind of just the times that we live in. So I would definitely encourage people to use their local resources to get ahead of it, knowing that the insurance companies are using these technology factors to determine which risks they want to take on. And that being said, they are looking more on an individual level than they had in the past. So it's up to us as homeowners to recognize that we do know what can be done to reduce that risk. And again, mitigation and preparedness should be a mindset that we're going to tackle, and not all at once. It doesn't have to be, you don't have to knock out every single thing in the next, 3-day weekend. However, be more aware of it, and, you're investing in your home and you're investing in your home in the long term, because you'll either have to, if it feels like pulling teeth to put money into something like repairing or replacing a fence that's perfectly good, but it happens to be cedar, that money may have to be spent if you get dropped by your insurance company and have to get a new insurer that's more expensive. So it's definitely not the most fun way to spend our time or money. But when we have more of a communal mindset that this is for preparedness, this is for mitigation, and it's something that we're trying to have that shift so that we recognize that we're just doing the best that we can in case the worst case scenario happens.
Thanks so much, Emily. That's really helpful. And I really appreciate you touching on kind of that there is a disconnect between those local programs that are really here to serve and help homeowners prepare, and that those are just going to help, not necessarily speed up your process of that information getting to those companies. So thanks for touching on all of that. And then the next question we have is about kind of that policy scale. So Whether there are there measures being taken by Boulder County, the Colorado Division of Insurance, or other government agencies to prevent the cancellation of homeowner insurance policies due to fire risk?
And I'll throw it to Jim afterwards if there's anything you want to add on to that. But, for the most part, insurance companies can still choose their customers. And that's why, we drew a really, we spent time talking about the difference between someone non-renewing you and canceling your policy. Because either way it feels bad. But when they're just no longer choosing you as a customer, that might, that is a business decision that a for-profit company is making. Even though we've had insurance with the same company perhaps for 20 years in a row, and we feel like we have more of a special relationship with them, or we know, our kids play soccer with our insurance agents kid and we know them, oftentimes these decisions are more business decisions, and it might not be on the local level. It likely is more from corporate, right? So it is more of a corporate decision. And so that is what we're seeing more and more of.
And I would just add, and you were asking if like state is doing anything or the Division of Insurance. I mean, they are trying to do what they can to help with reducing premiums and, stability and all of that. I was going somewhere with this and it just occurred to me.
Yeah.
Oh,
And the 60 days that
yeah. I mean, the 60 days, like, to non-renew. And there's a bill in this legislative session that literally got introduced today. So I haven't had time to read the final version.
Yesterday.
Yesterday.
Yeah.
But that is more about non-renewed and like the transparency. They have to give you a reason, et cetera, et cetera. I don't want to go into it because I haven't fleshed out all the details yet, but that will be something that hopefully will help. But I mean, yes, they are aware. And, like Emily said, it's a private corporation, but they're trying to do what they can, at least at the state level. So,
And
to
just,
help.
it's an important issue. I mean, dividing up the issues of availability and affordability sometimes help in the
Yeah.
sense, in terms of availability, if we have 0 insurers in Boulder County, we're in trouble, right? Then we go to the FAIR plan. If we have 1, that's a lot better than 0, but it's not a robust marketplace with options and competition, so that influences price. So we don't want the situation where we don't have any availability of insurance or that availability is restricted. And so, we want multiple insurers and have that healthy, robust marketplace. And so that's the conflict a little bit. If you require someone to do something, or in terms of price limits, that might reduce availability. So those two things go together, availability and affordability. And so we are involved in terms of our efforts. And Lisa mentioned House Bill 251182 that has to do, the idea is to incorporate certification into the scoring process. In the previous question, we talked a little bit about scoring and that process of what's incorporated into scores and how those are used. But in terms of the first thing, we're really interested in reducing that risk. So if Boulder County and the folks, we have good mitigation programs and we have homes that survive fires, we want those factors taken into that rate setting, because each company has its own underwriting and rating procedures that they get to establish, and they're confidential and they're different. And so if we get multiple carriers, the idea is that some will recognize the benefit of mitigation and incorporate that. So that's what we're working at. We're trying to reduce our risk and show that example, that should impact the affordability question. But we've got both an availability problem and affordability, and those two are related.
Thank you so much. Oh, go ahead.
Yeah, thanks. One other thing I want to add is that, the investment in mitigation grants is going to be key as well, right? So, we're talking about how, you got to do the mitigation things in order to get the certification, in order to get the insurance at a lower rate. But, having that not fall on the back of homeowners to spend all that money, if there's ways that they can help as well. And that's something, funding for grants and recognizing those measures is a really big piece too. So
and we're really lucky for where we live, because we've got, thanks to the voters, an amazing Boulder County wildfire mitigation tax that supports education events like this, as well as, those foresters to be at the Watershed Center to be helping landowners with mitigation. There's a whole program from the mitigation tax as well to fund implementation of forestry projects and wildfire risk reduction projects. And then we've got state and federal grants leveraged as well right now that we're able to pull in and really expand on that funding.
I really want
I
to
do wanna
compliment
move-
that answer, though, because what we
Okay.
found in 12 years of Wildfire Partners is we can do a lot of mitigation without a lot of cost in terms of, especially if you're able to rake your pine needles and cut your grass and clean out your gutters and caulk and screen your vents. So many of the mitigation measures that we talk about are low cost.
Yeah.
There are some times what do we need? If you have a shake shingle roof, you got to replace it. That was a requirement since 1989. You got to factor that into your budget, and you've gotten 30 years to do that so far. So there are a couple things that, but in the general, we don't want to give the message that, hey, mitigation requires a lot of money. Everybody can go out right now and do an hour, 2 hours, 5 hours with very little expense and really reduce their risk.
And if you need physical help, reach out and we can work on finding volunteers and work to support that, because I know that not everyone has the ability to do that. But awesome point, and definitely want to make sure that we point to all those little actions that build up to big risk reductions. The next question we have is what, I'm just going to read it. I'm not going to try to say it. What are my options if I'm selling my home and my insurer has informed me that they will not be issuing new policies in my area? So the new buyers will not be able to obtain insurance. And then there is an add-on question of, in a similar problem, what if I have a mortgage but can't get home insurance?
So I'll take the first one because we have a program with realtors. We've been working on this for 12 years, and that's where we're really unique in the country in some of our certification process. So we've negotiated with Allstate to give that new buyer extra time. So a lot of people, some real estate transactions at closing have fallen through because of lack of insurance. So it's important when you're selling your home to think about this months in advance and get certified. And that'll help facilitate that transaction. If you're waiting to do your mitigation when people are waiting to sign that at that closing, it's too late, right? So you got to think about this in advance. But that's why we have Wildfire Partners in the certification, because we worked with the realtors, we've worked with insurance companies. So we've negotiated that extra extension for that new buyer to do the mitigation through partners. But you need to think about that in advance before you're closing. Think about it before you put your home on your market. And when you're buying, you look for that Wildfire Partner certificate. We're working to get it as a searchable field in the MLS right now. You can download that, so you should search for that. And you should ask for that when you're looking to buy a home. But it's a recognized problem across the state. Actually, legislation was introduced last session where they actually thought about at the point of sale requiring certification, which would even slow down the markets potentially even more. And that was opposed by some realtors and didn't pass. But really, at a time of putting your home on the market for sale, is the perfect time to get things cleaned up. What we say is everybody's used to staging the inside of their home to make it look beautiful and clean and neat. You also have to stage the outside of your home so it's mitigated and you've done all that mitigation. So when you're shopping for a new home, you're looking at those mitigation certificates. And when you're selling a home, you're doing that work in advance. So you have to think about the time. And we're really working on that to help people sell their homes.
Thanks, Jim.
I'll let someone else
Emily,
answer the
anything
second
to-
question.
Yeah, thanks.
That's wonderful.
And the first question too, feel free to hop in on that.
Okay, one was about mortgage, and
Yeah,
then what,
so
sorry, what was the other part?
First, selling my home, insurer isn't going to issue new policies in the area, so new buyers won't be able to obtain insurance. Second question, if I have a mortgage but can't get home insurance.
So that is the crux of why the Colorado Fair Plan is being created, so that there is this backstop, and homeowners with existing mortgages and those who want to live in that area, they will have an insurer of last resort. So if it's not worth going bare if you don't have a mortgage. It's a very, very big and scary risk, unless you feel like you can self-insure, which not many people can. And your mortgage company does have a forced place policy that it will put on your mortgage and on your property, but that's covering the cost of their mortgage, right? Of their risk. It's not covering it's not covering you in the sense of there's no additional living expense coverage, there's no contents coverage. It's really bare bones and it's very expensive. They just kind of weave it in. So it's, it's not a great option. Really, we're glad that the state will have this backstop because it's needed, right? And marketplaces are dynamic. So, so while insurers might not be offering it now, if you do end up in the Colorado Fair Plan, another piece of advice we have is it's not just like throw your hands in the air and say, I guess this is where I'm living for the rest of my life. It's okay when you're up there's 6 months or a year afterwards, reach out to a proactive agent again and say, has there been any movement? Is there any way I can get out of the fair plan at this time? And is there anything I can do to help me get out of it as well?
That's really helpful to think about it being a long-term continued request for just like you'd follow up with a job application. Hey, did you see my application? That's really helpful. Lisa, do you have anything to add on that before we move to
No, I mean, I was just gonna say about the the real estate thing. I mean, I think, it's would be worth it. I mean, I agree with everything Jim said too, but just to see like if the fair plan is there as a last resort, but there could potentially, depending on where the person lives, there could be surplus lines policies that could potentially be available too. So it's worth checking out all the avenues. But yeah, like Emily said, that's why the fair plan is coming into existence. And if you need it, you need it for hopefully a limited amount of time. And then you bump yourself back
Mhm.
up into the other market.
Awesome. Thank you. So the next question is, my insurer has informed me they will be doing an external inspection on my home. How do insurance companies use exterior home inspections? Do they influence premiums or coverage? Beyond mitigation, I think, is there anything we can do to make this home inspection work or external inspection work in our favor? So maybe thinking beyond the mitigation component, since I think we've touched on the importance of mitigation quite a bit.
Yeah, I mean it's mitigation adjacent, but just you are in some way staging the outside of your house, right? So if there is something that you typically keep against your house, move it, right? So there are things that you can do in that effect, but if they that doesn't necessarily mean it's a person that's going to come out and take a look. So maybe it is if it is a virtual drive-by, if you will. And there is a negative result on your end, ask to see the photos. To say, make sure that um, if it's, for instance, satellite imagery or something like that, ask to see the photos just so you can verify with your own eyes, like, well, what is it that they saw? Is that really the thing? So, for instance, we've heard stories of people having something on, like their the condition of their roof was the thing that triggered a non-renewal from an aerial image, and it was really a solar panel in the image, right? Or sometimes it's not even your property, right? We've seen mistakes in the past, so get copies of the photos, ask to see timestamps, ask if there's anything you can do to reverse the decision. Those are the main pieces of advice, and but good luck, and that's kind of why we're talking about having it be a mindset, because you never know when something like that will happen.
Thanks. And from what I've heard before, but just to confirm, it sounds like they do use those exterior home inspections to evaluate your risk, and those can affect your status and premiums and coverage. Is that just
Yeah.
to make sure we get that first part? That's correct.
Yeah.
Okay, cool. Thank you. Not cool, but thank you.
Yeah.
Great. And another question is, what steps do I need to take to include things like detached structures or rooftop solar panels in my home insurance coverage?
Well, I can address the solar panels because I'm getting solar panels on my house tomorrow.
Thanks.
So basically, I mean, and Emily can chime in, but for solar panels, you basically just call your agent and say, I'm getting solar panels. this is how much I paid. And then they should adjust you'll probably need to adjust the value of your policy up to include the value of your solar panels into that, which is I just did. So, and probably there'll be a additional cost involved in that, which, everybody's going to be different in what it costs. Mine was fairly minimal. I was actually surprised. And then what was the other one? Solar panels, structures?
Detached structures or accessory dwelling units, detached structures, sorry, not attached, garages, ADUs.
Yeah, so with that, the key there is to look on your declarations page. That's your summary page. It's got like all of the your identifying information. It's unique to your property. It's got your name, your property address, your square footage, and those sorts of things. And on it, your insurance is typically separated into buckets. So there are usually 4 buckets. You have your dwelling coverage, which is like your main structure. And then there's coverage, usually it's coverage B, but it could be, it could be under a different name, but it's usually B, which is other structures. And that's the one you want to take a look at and see, does that align with what I have that's, detached from my property? If it's, if you purchased your insurance policy and that was not there, or you had upgraded on the outbuilding or ADU that you have, or even if it's just a really awesome shed, the value could be different than what's in on your policy if they just calculated that as a quick formula of, say, 10% of your dwelling coverage. So usually there's, you have your out of the box coverage, which is just like, they'll just assign percentages as like, this is a typical, this is the typical amounts. And so, really take a look at that at declarations page. And if you have made improvements since, like Lisa said, since you've purchased your insurance policy, usually it's around, if it's over $5,000, you're required to report it. You can probably find that in the fine print. But you want to make sure that they know about it, because that's where you can get in trouble in claim time. If you're like, if either you don't have enough insurance for it, or they're like, we have no record of this, and they, especially when we're talking about the actual cash value of something versus the replacement cost of it.
Thank you. That's super helpful. And I'm going to keep going through a few more questions until our end time at 7:15. We've made it through the pre-submitted questions. Yay. Thank you, Emily, Jim, and Lisa. And we're into the survey link questions. I see that our numbers are decreasing. We've still got a lot of people, but I did want to just put a quick plug in that you likely, if you live in the St. Vrain watersheds in northern Boulder County or up into little bits of Larimer County, you would have just received a household survey that had the Watershed Center's logo on it about 2 weeks ago, and you've probably received a few letters that had my signature on them. And it includes questions about, your status of insurance, like, are you getting threatened with insurance loss? It also includes a lot of other questions that help local wildfire mitigation practitioners and fire districts help us all get grants. And these programs, like Emily was saying, a lot of these grants are really important and impactful. And your survey response can help us justify the need for that mitigation funding. So if you got it, please take some time to respond. And if you don't feel like filling out the whole thing, you can fill out little bits, and that's totally fine. So just wanted to plug that. So our next question, now that I'm off my soapbox, is, are some insurance companies better than others about giving individual homeowners credit for mitigation?
Jim, you want to take that one?
Yeah, I was gonna say, why don't you take that one, Jim?
Yeah, I don't have, as a county, we don't endorse any specific insurance companies. We've seen changes over my 15 years. We had leaders for some companies that were at the forefront of mitigation, and then now they're not. And so it's a dynamic marketplace. I mean, even the change we've seen, it wasn't that long ago that insurers didn't even pay attention to wildfire risk because it was so low down in their loss that it wasn't a big enough loss to take important consideration to, and then zip codes. So it's changing, and I don't think when we're going to see with this legislation that's introduced Monday, how they'll respond. Just in terms of right now, it's availability, not affordability. Which companies are in Boulder County? And so right now we are working most closely with Allstate because they are the ones offering new policies, in terms of taking on and recognizing the certificate. And so it's not necessarily compared to all others because they are active in Western Boulder County and they are accepting the certificate. So they are one that's just the most active right now. Hopefully we'll have more and more come into the county. There's interest, but it's a changing world. So it's some might be good today and then tomorrow they change their policies based on some the risk model or what their exposure was in California. There's so many variables that it changes over time. But we've had some really good partnerships with a number of insurance companies really interested in reducing the risk.
Awesome. Thanks, Jim. And it sounds like maybe that's a question that could be asked during that kind of proactive insurance agent broker interview phase where you're shopping around and asking, does my mitigation action or does my fire protection district saying that I've decreased my risk through mitigation, does that help? Sounds like that could be kind of a question for them too. So we have a lot of structures around this area that were built before 1950. Do you have any tips or resources for ensuring non-conforming structures like a group of cabins built before 1950? So accessory dwelling units, but cabins in a lot of them.
Yeah, your best bet will be to find those proactive brokers. So sometimes an insurance agent can only sell through one company, and then you'll have an insurance broker who will be able to write for many different insurance companies, and they often have the access to, like Lisa was saying, the non-admitted carriers, or it's a little bit of the out of the box or the ones that actually didn't. I was going to say the ones that didn't sponsor the Super Bowl, but I did not see a single insurance ad during the Super Bowl, which I think was a intended move on their end. But typically, the other liability and other risks. And so I would definitely work with an independent broker who would be able to also value what that is and how much you want to insure and see what the options are there.
Yeah, and Lisa described this as a crisis. So in some ways, if you are able to find a policy, that's a good thing. In terms of selecting between multiple policies and seeing which one's the best, if you have that luxury, then to research those options. But right now in the crisis, just finding insurance is tough. And so obviously there's a factor of price and the reputation of the company, admitted versus unadmitted in the FAIR plan. But right now we're just hopefully finding insurance that's affordable.
Yeah, and I just want to piggyback on that and just say part of the reason why it's a good idea to go to an independent broker is because they already know the lay of the land, right? So they already know who is selling and who has really pulled back. And it can be really discouraging if you get dropped by your insurance company and you start shopping around and you don't know who's in and who's out, and you start calling people who are just out. They're just not. They might still have policies in the area, but they're just not writing additional coverage, right? They're not expanding their book of business. And it can be really discouraging if you call one company and they say no, and then another and they say no, and then another and they say no, which then you'd be able to go to the FAIR plan, but you might have other options there. You just didn't know which ones were writing. So that's why a broker might be able to help.
Thank you. Thank you both for that. And I think that was our last question that we'll be able to get to tonight. And I just want to really profusely, from the bottom of my heart, thank Lisa, Emily, and Jim. Lisa, it was so exciting to meet you at that conference again, because I was just like, I get so many questions about this every day. And we're really excited that you all are able to be out there providing this resource and information, because it's really critical and affects so many people. And definitely keep on the lookout for another webinar more focused on the Wildfire Partners program and kind of those specific mitigation actions that you can take. But once again, we will be reaching out in the next week with a recording link, presentation slides, and then link to Wildfire Partners resource sheet that United Policyholders has created, and lots more. And feel free to reach out to Maria or I if you have any questions or want to be connected to anyone specifically. And thanks all for attending this webinar tonight. Really appreciate it.